Hello and welcome to today's webinar. We will be getting started momentarily. We're just waiting for some of the viewers to join. And thank you so much for the comments. We appreciate that. So we will go ahead and get started with today's video. And first off, again, thank you for joining. This video is going to be posted as a recording after we're done. You can please ask questions in the comments and I will answer those questions as we go through the slides. If you're watching as a recording, if you expand the YouTube description, you'll be able to see that there's a place that you can jump to with a calendar, or excuse me, with the chapters links inserted so you can jump ahead. But please also like and subscribe. We really appreciate everyone taking the time. Today's topic is a very common topic, which is a great topic, which is the do's and don'ts of real estate solo 401k investments. So we're going to jump right into some of the do's and don'ts. And please, again, ask questions as we go through the slides and we'll answer those questions accordingly. So in terms of to set the stage, we're referring to someone that is self-employed, doesn't have any full-time W-2 employees working for their business, has a solo 401k plan for the business, and has their solo 401k plan through a provider like my solo 401k financial, which offers a plan that allows for investing in alternative investments like real estate. So if you have a solo 401k at a quote unquote free solo 401k at a brokerage, like say Fidelity or Schwab, their plan is not going to allow you to invest in alternative investments like real estate. So you need to restate it over to a provider such as us that does allow for that type of investment. And investing in real estate is one of the most common reasons people set up accounts with us. So the concept, of course, is that instead of investing in, say, mutual funds or stocks, it's just a different type of asset. It's real estate. And so here, we're going to be focused on physical real estate, such as owning title to a single piece of real estate, as opposed to a private placement or maybe a loan that's secured by real estate. So, and we have a tremendous amount of information on our website, mysolo401k.net, where you can read more about these procedures. But let's jump in. Thanks for that. Thanks again for listening to that introduction. So the first thing you want to do is, as it's stated here, do determine if your solo 401k is allowed to hold real estate. So that goes back to the first point that I was making, that you need to be with a provider such as us that offers an IRS approved plan that allows for alternative investments such as real estate. So some providers, for example, again, if taking the Fidelity Solo 401k example, if you obtain the Solo 401k directly from Fidelity, where Fidelity is using their plan document's not going to allow for real estate investment, whereas ours does. Of course, you can come to us and get a solo 401k, and you can also have the account at Fidelity, but that would be you would go through us. We would prepare the paperwork to open up a free brokerage account that would be governed by the plan. And you can invest in real estate as well as investments that Fidelity offers through a brokerage account. On the don't side of the equation, you certainly don't want to personally sell or exchange property to the solo 401k plan. So for example, this is akin to the IRA rules. The solo 401k rules prohibit the use of your solo 401k to buy property from yourself or from a closely related family member, such as a spouse, such as a child, such as a parent, so individuals up and down the family tree, such as an entity that's owned by one of those individuals. So if you have a rental property, say, that you own personally through an LLC, you could not have your solo 401k buy that property from the LLC that's owned by you. That's considered to be a prohibited transaction. And great question. So in terms of that point, there is no difference. So you're not going to be able to do something with the solo 401k that you can't do with your self-directed IRA. There is a difference though in terms of some of the tax consequences, your ability to have checkbook control over the money. There's some important differences there. And we can post a link on the comments here after this video posts to resources that explain some of the differences between a solo 401k versus a self-directed IRA. But on that point there's no difference. Thanks for that good comment. Next point, you want to confirm that the solo 401k has enough money, has enough funds. So on the flip side, you don't loan funds to your solo 401k. So you want to make sure that you budget accordingly, that you have room in your solo 401k to handle expenses once the solo 401k takes title to the property. Because if there's not enough money, because expenses need to be paid from the solo 401k account. So if you don't have money in that solo 401k account, you will have to get money into that solo 401k account, either by making a contribution or rolling money over from an existing retirement account that's eligible to be rolled over, like say a former employer plan or a non-Roth IRA. And if you're going to make a contribution, of course, you've got to have the self-employment income to justify the contribution. It's got to be within the contribution limits, etc. So that's why we say here, before you make the purchase offer, make sure to have the solo 401k funds lined up. You may need to transfer IRAs or make contributions, for example. On the flip side, it is prohibited to loan your personal funds or business funds to the solo 401k plan. Oh, great follow-up question. We're going to go through some slides, but we'll answer that question. We'll address that question. So next set of do's and don'ts. Do make the purchase offer in the name of the solo 401k plan. So anytime you're making a solo 401k investment, it needs to be made in the name of the solo 401k. In other words, it can't be made in your name. It can't be made in your business, in the name of your business, because this is not a distribution. If you were to take money out of your solo 401k and buy real estate in your own name, that's going to be a distribution. Essentially, you're buying, and it may be a prohibited transaction. So you want to make sure that when you purchase the real estate, you do it in the name of the plan. So you write the offer in the name of the solo 401k. And so you wouldn't, for example, buy the real estate in your name and then try to assign it to the solo 401k. That's a prohibited transaction. That's a transaction between the disqualified person and the plan. So you make the offer in the name of the solo 401k. Again, on the flip side, don't make the offer in your name. The solo 401k is investing in the property, not you. So the offer is written in the name of the plan. So thank you for that great comment. You asked me to repeat the last don't. So the point here is, when you're making the offer to buy the property using your solo 401k funds, it needs to be made in the name of the solo 401k. So don't make the offer in your name. So if you have John Smith, who is an attorney and has a solo 401k that's sponsored by his attorney business, let's say the name of the plan is JS Investment Trust. So the question is, when you make the offer, what name do you use? You don't use John Smith, the name of the person. You use JS Investment Trust. Hopefully that answers your question. Do fund escrow using solo 401k funds. So just like the offer is made in the name of the solo 401k, the escrow, the earnest deposit, is made using plan funds. So you can't use personal funds to fund the escrow. That's why it's important to get everything set up in advance, the plan set up, the account set up, the money transferred or the funds contributed, so that you're ready to make an investment. So that's, again, the flip side is escrow is funded using solo 401k funds. You don't first fund it using personal funds and then have the solo 401k reimburse you. That'd be setting yourself up for a prohibited transaction. Okay, thank you so much for all the great questions. We'll get through another few slides here, but we'll make sure to address all of them. So next set of do's and don'ts here. Do take title in the name of the solo 401k at closing. So just like the offer is made in the name of the plan, the title is taken in the name of the plan at closing. So the title will transfer to the trust. In our simple example, JS Investment Trust. So don't take it in your name personally. it's taken in the name of the plan, because this is not a distribution. This is a solo 401k investment. This is now a solo 401k asset, meaning the property. And so the title, the legal title needs to be titled properly in the name of the trust. You are the trustee acting on behalf of the trust. So it wouldn't be appropriate for the trustee to take ownership. Really, the trust, in this case, your solo 401k takes ownership. Next set of do's and don'ts. Do wire the solo 401k funds to the title company. So the solo 401k plan is investing in the property. So therefore, the money goes directly to the title company from the solo 401k account. Let's say you have an account at the bank. So the money is going to go directly. Let's say that bank account is opened up under the name of the plan, JS Investment Trust. So the money is going to go directly from that bank account over to the title company. So a lot, as opposed to having the money, say, go into your personal account first. No, you would want the flow of the money to be consistent with what you're doing, which is making an investment inside of your solo 401k. That's why we say on the flip side, on the don't side of the equation, don't have the solo 401k funds make a pit stop. So at closing, the solo 401k funds cannot first flow to your personal or business account, as this will result in a taxable distribution. Okay, so thank you again for all the great comments. So we'll go through this slide, and then we'll start to answer these good questions and comments. So do pay expenses using solo 401k funds and return income back to the solo 401k plan going forward. So once you've acquired the property, all the income and expenses needs to go in and out of the solo 401k account. So let's say that it's a rental property. So ongoing expenses like repairs, the toilet breaks, that expense needs to be paid from the solo 401k account. The rent checks, so as the rental income is coming in, it goes back to that same solo 401k account. Property taxes is an example of an expense that would be paid from the solo 401k account. So you wouldn't have the rent check deposited into your personal account and then you transfer it to the solo 401k account. No, it needs to go directly into the account in the name of the solo 401k. And on the flip side, you would not use the property, you would not pay expenses with personal funds, number one, or business funds. It needs to be paid, again, with solo 401k funds. And then on a related point, you cannot use the property for personal use or business use. So it has to be used strictly for investment use. So even if the property is not occupied, you could not have, and you've got, say, out-of-town guests in, you can't have them stay at the property. That's a personal use that's prohibited. Okay, so let's start to go through these questions. And again, thank you for participating. Please like, please subscribe for more videos like this. So we got the first one here. Can you buy a business either with a solo 401k and a self-directed IRA? It is possible to invest in a business passively. Of course, you've got to consider that you can't be on both sides of the table. You can't be working in that business, for example. And in addition, anytime you're talking about investing in a business, if that business is not taxed as a C corporation, let's say it's taxed as a pass-through, such as a LLC, then the income attributable to your retirement account, it's ownership interest. Let's say your 401k's ownership interest in an LLC that operates a cannabis business, that income may be subject to unrelated business income tax. And we have a lot of great information on our website about that topic. So next question. E-Trade told me they don't give checkbooks for solo 401k accounts. Can I wire the money to my personal checking and then write a personal check for the real estate investment? So good question. We answered that here, where the money needs to go directly to the title company, the escrow company. And feel free to send us an email at business@mysolo401k.net if that's questions coming from an existing customer. Put your plan name in the title, and we can help you because there's a process to get a checkbook from E-Trade. You could, of course, also transfer money directly electronically from the E-Trade brokerage account over to the title company. Next question, for an investment property, can you get dividends from rental income, or will you only get money when you are of retirement age? So two different points here. One is the income and expenses, as stated on this slide, needs to go in and out of the solo 401k account. If you later then want to take money out of your solo 401k for your personal use, you've got to consider the distribution rules. So if you're eligible, which, for example, because you're a retirement age, then you would take the money from the 401k account. You wouldn't have, for example, that rental stream just paid to you. You want to make sure that the flow of the money is correct. And then also when you're taking a distribution, that has its own separate compliance process. So you'd want to, if you're a customer of ours, you want to work with us so we can guide you through it, because, for example, we would have to handle the 1099-hour reporting associated with that distribution. What institution can I use to fund the solo 401k? There's various. We've got clients that have accounts at hundreds of different banks, credit unions, also many different brokerages such as Fidelity, E-Trade, Schwab, TD Ameritrade, just to name a few. And of course, as part of our services, we prepare the paperwork that's needed to open up the brokerage account, or the packet that the bank would require to open up a bank account. Next question, solo 401k is available to business owners only, right? Well, it's for an owner-only business. So it's for a business that doesn't have any full-time W-2 employees. So there cannot be any full-time W-2 employees working for a business that's owned by you or a spouse, if any. I have my account at Fidelity. Do you know if they will also issue a checkbook? Well, if it's a solo 401k through us, where we prepare the paperwork to open up the account at Fidelity, yes, they issue the checkbook. If they haven't issued you the checkbook, you can send them a secure message to have them resend you a checkbook. It has to be what's called an investment-only account at Fidelity. Next question, can the 401k use debt to purchase real estate, issue a mortgage? So I understand your question is that the 401k would purchase the property with cash and debt, where the loan is issued to the 401k. The answer is yes, that needs to be a non-recourse loan. There are specialty lenders out there that specialize in lending to an IRA. We've got a tremendous amount of resources about that, as well as a list of those specific lenders. As a rule of thumb, you typically want to have around 50% of the money that you'll need, and it's all about the property, because the lender is just lending essentially against the property. They have no recourse against you because it's a non-recourse loan. Next question, in my case, with a Fidelity account, a rent check would be mailed to Fidelity for deposit. That's correct. You could mail it, or it could be taken to the branch, a Fidelity branch. If you've got a local branch, you can go to their website and look for local branches. You want to make sure that Fidelity is directed to deposit the money into the brokerage account for your solo 401k. What about expenses next question, what about expenses like travel, mileage to visit the property? Can they be reimbursed from the solo 401k plan? No, they cannot. Those are not expenses that can be paid by the solo 401k, whether directly or by reimbursement. Generally, you can't be reimbursed regardless. The expenses needs to be paid directly by the solo 401k. Next question, so investment property, you cannot live in because that is personal. That's correct. You cannot live in the property. Next question, can you create a land trust that is owned by your solo 401k? The beneficiary of the land trust is the solo 401k, and use the land trust to purchase the investment property. That's a very rare, but it's theoretically possible. You would want to make sure that everything flows to the solo 401k. For example, the beneficiary is the solo 401k, as you noted. You could also do that through an LLC. That's more common. And we have a tremendous amount of resources on our website about how to invest via an LLC, where the member or the owner of the LLC is the solo 401k. And you're the manager, so you have the checkbook control over the money in the LLC. Next question, does the rental property have to be owned in the 401k to be able to pay expenses from the 401k? I own rental properties outside the 401k and want to know if the 401k can pay for expenses on those. The answer is certainly not. So the 401k funds need to be used to benefit, they need to be used for 401k investments, not for your personal investments. So the 401k would have to own the property. And again, you can't sell a property that you own personally to your 401k. Can the solo 401k take community grants for property development? Highly unlikely. Typically, that's the terms of the grants are for a business typically. I mean, that would be up to the grant provider. And keep in mind, the solo 401k has to be used for investment purposes. Next question. I'm a current client of yours with a solo 401k. Thank you. Your website says that a special operating agreement is needed to purchase property through LLC. Where do I download the operating agreement you referred to? So it's not something that is a customized operating agreement that would need to be prepared for your solo 401k. So please email us at business@mysolo401k.net and include your plan name in the subject line so we can provide you more specific information about your situation. Thank you for that great question. We have a solo 401k trust with Schwab set up by MySolo. Thank you. We want to rehab and flip a house with a percentage from each of our accounts. How do we manage rehab budget and maintain the proper percentage split? So I understand there must be two of you in the solo 401k with separate accounts at Schwab, and you want to use funds from each account. So in that case, and I see you got a follow-up question here. So we recently set up companion bank accounts. Can we set up a separate bank account just for this project and fund it with the appropriate percentage split? Example, 80%, 20%. So the way that it's typically done is that, let's say you have 80% of the money coming from one person's solo 401k sub account and 20% coming from the other person's solo 401k sub account. So when it comes time to purchase the property, there'd be two wires, 80% from one account, 20% from the other. And then for administrative ease going forward, you could have all the income and expenses go in and out of one person's account, and then you would reconcile between the two accounts, at least on an annual basis, and certainly before you took any type of distribution. Next question. Can you have two different checking accounts for rent deposits at two different banks? There is no local Fidelity branch in my area. Can the check be given to me and then I deposit it? So two questions there. First, yes, the 401k can certainly have multiple accounts. So if you want to set up different accounts in the name of the solo 401k for different projects to help you track the funds, that's acceptable as long as each account is set up under the name and under the EIN of the solo 401k. The check can be, you as the trustee can certainly take possession of the rent check and then deliver it to Fidelity, either in person or by mail, to deposit it into the Fidelity account, or you could take it to the bank where you have a bank account in the name of the solo 401k. Next question. If you do the paperwork for the solo 401k and I open the account at Schwab, can I buy real estate and buy stock with solo 401k money? Certainly. That's one of the top reasons that people want to have the account at a brokerage, because they want to have the option to invest in alternative investments as well as traditional investments like stocks, bonds, mutual funds that Schwab offers. Schwab will give you a checkbook. You can also wire money out of that Schwab account, but you're not going to have access to certified bank checks. You're not going to have access to a debit card. You're not going to be able to ACH money out of the account, which is why some folks will also want to add on a bank account to help them with their alternative investments, such as real estate. And you can move money between the bank account and the brokerage account, and that's not a reportable event or a taxable event. Next question. I find it is easiest to have an LLC with its own bank accounts. Solo 401k invests in the LLC. You get a lot more flexibility. Banks, title companies understand it better. You can get partners. Thanks for that good comment. So generally, that's correct. Of course, there's different caveats. For example, take the partner situation. So then that situation, that LLC would have to file a partnership tax return, issue a K1 to one partner, the solo 401k, issue another K1 to the other partner. But yes, generally the concept works. Follow-up question on the grant. So that's an interesting question. That's a good one. You're saying local city gives away funds for improved developments in city limits. They don't care about who's named as owner. Would the funds be counted as contribution, income, or other? I would say it would be a return on the investment. It's sort of akin to if you open up a brokerage account and they give you a promotion to open up the account, say $600 to open up an account at Schwab, for example. Here, the city is giving a promotion if you buy real estate in their jurisdiction. Next question. What is the recommended path to own a business if I have a self-directed IRA account? Well, I gather that you're talking about owning a business that you're going to own and operate. In that case, neither. In that case, the the path would be to use what's called a 401k, a Rob's 401k business financing plan, which we offer. We've got a tremendous amount of resources on our website. As long as you have money in a non-Roth IRA, you'd be able to roll it over to the Rob's 401k. But there's a number of specific requirements you have to follow. Like, for example, you have to operate the business as a C corporation. You'd have to, if you're buying a business, you would have to buy it from an unrelated person, et cetera, et cetera. Next question, regarding the special operating agreement question, I assume once the solo 401k is set up, you would just proceed to buy a property as usual, but in the name of the solo 401k LLC. Well, you would have to, so if you have an LLC under your solo 401k, you'd have a separate bank account in the name of the LLC and under the EIN of the solo 401 of the LLC. So solo 401k account, LLC account, money moves into LLC account, then you buy property in the name of the LLC. But otherwise, it's going to have the same types of rules, except everything's going to be done in and out of the LLC account. Oh, and thank you for that, for saying thank you. You're welcome. We appreciate your business. Thank you. I was able to transfer the 401k to a solo 401k set up at Fidelity and purchase 3 homes. Oh, well, that's great. Thank you so much for sharing that positive experience. We really appreciate that. Next question, if the LLC where the solo 401k is the sole member makes the offer and subsequent purchase on real estate, do you need to let the seller and or bank know that the LLC is owned by the solo 401k? In all likelihood, yes. Certainly banks have a know your customer requirement. The seller, they may or may not ask. That's my reaction to that. Oh, thank you so much for the positive feedback. We appreciate that as well. And we have a follow-up. The property is owned by the 401k. That must be relating to a different comment. I'm not seeing the related comment there. So you may want to add clarity to this comment, please. Thank you. And we've got a question about who did you use for the non-recourse loan? So we will set up a discussion section on our community website, where if you want to continue the discussion, you can certainly take it there, and we will be monitoring and participating as well. Certainly we can, so I would encourage you to please join and continue the conversation. Thank you so much for everyone's participation in this webinar and all the great comments and questions. We certainly appreciate the chance to participate in this discussion. And as we've got a few more, we do have a little bit more time here. So, it sounds like First Western Federal Savings was used. Next question, I have a W-2, my wife is self-employed. I would assume that I can join her solo 401k. So if you have a W-2 job and your wife is self-employed, that's not going to allow you to participate in the solo 401k. You need to having a W-2 job doesn't preclude you from having a solo 401k, but it doesn't enable you to have a solo 401k. You need to have your own self-employment income. For example, Schedule C, or if I'm not sure how your wife's business is organized, but say it's an S Corp, you would get your own W-2 from her S Corporation, and then you can be onboarded onto her solo 401k. So good question here. A friend of mine and I would like to buy something together. I have a solo 401k with you and he has a Roth IRA. Can you give an overview of how that would work? So one option is theoretically is a tenancy in common. However, that could be cumbersome. It's, of course, the individual would have to have a Roth IRA at a company that would allow them to invest in alternative investments. So there are a number of self-directed Roth IRA providers out there, so it's possible. I would say what most folks would do in your situation is have an LLC set up where one partner is the solo 401k and the other is the Roth IRA. So you'd have a operating agreement, you would have a separate bank account, everything would be bought in the name of the LLC, all the money would go in and out of the LLC bank account. So that's how I would typically see that it's done. Of course, the LLC would have to file a partnership tax return because there's two owners. One is the solo 401k, the second is the Roth IRA. As far as the bank lending to us as co-buyers, that again goes back, if it's an LLC, it would really just be one buyer, the LLC. Of course, it would have to be a non-recourse loan. From the Roth IRA owner's perspective, though, they may have a negative reaction because if you buy property inside of an IRA using non-recourse debt, generally that's going to be subject to unrelated debt finance income tax. Whereas if you do it inside of a solo 401k, there's an exclusion. So that person's Roth IRA may have to pay tax, unrelated debt finance income tax, on the income that's attributable to that person's or to the ownership stake that's in that person's Roth IRA. Next question, can I use a loan for my solo 401k as a down payment to purchase rental outside the 401k in my name and pay it back over time? Or is this a prohibited activity? Excellent question. So that is certainly allowable. You have to have a solo 401k that allows you to take a loan. Of course, you've got to consider the loan limits, which is 50% of the balance, not to exceed $50,000. You've got to work with the provider to get that loan documented. We handle loan documents, of course, as part of our service for no additional charge. We prepare them in 1 business day. The terms are you have to pay it back monthly or quarterly. Equal payments of principal and interest. Interest is prime plus 1%. The payments are spread over a 5-year term. Of course, if you've already got a solo 401k, you've got to reduce the second, if you've already got a solo 401k loan and you want to take a second loan, you got to reduce how much you can take on the second loan by the highest outstanding balance of any loan that was outstanding over the prior 12 months. So even if you paid one back, say in the last 6 months, you've got to consider the highest outstanding balance. So more information shared on someone's experience with a non-recourse loan. Thank you so much for sharing that. Next question, I'm sure your wife could pay you with a 1099. Is this correct, George? Well, of course, you want to discuss that with your tax advisor, but assuming that your wife, ultimately, if you're reporting your own self-employment income, such as on Schedule C, because you get a 1099 from your wife's business, that is the type of self-employment income that we're referring to justify your participation in the solo 401k. Are there any retirement accounts that let you loan more than $50,000? Not to yourself. Of course, you can loan more than $50,000 to an unrelated person, but you can't have them turn around and give it to you. That would be a step transaction. Who sees the operating agreement? Next question, who sees, and this is a follow-up, who sees the operating agreement that you say is required by an LLC owned by a solo 401k? Well, it could be required by different parties. For example, a bank, it could be required by a title company. It could be required by a bank if you're getting a non-recourse loan. Good question, thank you. Next question, back to funding the rehab question. Can we set up a separate bank account specifically to use for the project rehab and fund that account from our solo 401k? Yes, that is acceptable to do so. You'd want to be very careful though to make sure that everything is very, that you have good records and that that account is strictly used for that one project. Typically, as a practical matter, it's going to be helpful if it's a non-interest bearing account. So you don't have to determine whether any interest earned on that account is so you don't have to determine the interest earned and how much is attributable to each. Excellent. Well, thank you so much for all the great questions again and participation. I don't see any more questions, so that would take us to the end. Just please like and subscribe. And Please like and subscribe. You can contact us again at business@mysolo401k.net. And we appreciate it. Have a great one. Thank you.